Hey, what's going on, dudes and dudettes? This is Pip Surfer with another daily update for the Cowabunga system. Today is Monday, December 1st, 2008, and I hope you all had a great Thanksgiving weekend. I've been taking a few days off just to relax and take advantage of the home-cooked food and just time with friends and family, and it was good to just relax and rest the mind and kind of get away from trading for a little bit, but I am back and refreshed and ready to trade, and that's always good to have. You know, when you take a break from something and then you come back to it and you feel ready to go. And if you haven't taken any kind of vacations like those, I recommend that you do, because it's really good for your body and it'll keep your mind sharp. So let's go ahead and get into today's update. Let's look at our 4-hour chart first of the cable, and you can see right here we had a trend change candle. This was yesterday at around 7 p.m. This was the 7 p.m. candle, and you can see that a new trend change candle formed there. And if you look at today's action, we had quite a big drop here. So a lot of bearish movement. No new trend change candles formed during our trading session, so the trend remained down, and we only look for short trades today. So now I'll go to my 15-minute chart and just move my chart back to before midnight so you can see what it looks like. And before I start trading, I'm going to take a look at today's news. And actually, let me look at some of the comments I had, let me see, from last Tuesday. When you look at news events that come out, do you only pay attention to the red flag? Lissy King, I usually do pay attention to the red flag ones. There are a few orange ones that I'll watch out for, like the Philly Fed Index, I know is one off the top of my head. But for the most part, it's just a good rule of thumb is just watch out for the red flag news events. But I will try to note when I do pay attention to certain orange ones, because they can have an effect on those. I think another one is the ZEW economic business climate for the euro. Sometimes I'll watch out for that. So there are certain news events that I'll pay attention to that some places might not classify as a red flag event, but I'll still pay attention to them. Another question from you was, let's see. I was watching, unfortunately, I'm confused why you didn't. This is why you said one of the rules to trade, which means, let's say we have a candle at 4 a.m., but from yesterday, news candle was at 8:30. Oh, I see what you're saying. Yeah, you don't want to enter it. Yeah, I know the news candle, let's say, is at 8:30, and that's the news candle. By the time it closes, it's 8:45. However, because the candle started on the news time, we don't enter it. So if you did have a trade, let's say news came out at 8:30, you would not be allowed to enter at the 8:30 candle, which would close at 8:45. Now, if there was a signal at the 8:45 candle, which actually closes at 9, and you had a valid signal there, then that candle would be okay to trade. So I hope that answers your question. But good question to ask. Thank you. Silvermark, my favorite today on BP. I was just wondering, isn't risk 41 pips to make 26 a bad risk to reward ratio? I've talked about this before, Silvermark, but this is a great question, and if nobody's heard this yet, then it's fine if you listen to this one, because it's a good question to ask. But the reason why it's okay to have a bad risk to reward ratio is because my trades win over 50% of the time. Remember, risk to reward ratio is basically just telling you what your risk is to your reward. If you are winning less than 50% of the time, then you have to make sure that all your trades have at least a 1-to-1 risk to reward ratio, if not better. Preferably you want it higher, because you're winning less percentage of the time. But since the Cowabunga system wins about 60 to 70% of the time, then it's okay to have these bad risk to reward ratios. So I hope that helps, because even though the risk to reward ratio is bad because of the high win percentage, you'll still be profitable at the end. Humster is asking about the clean break. Basically, I look at momentum. I'll zoom down to a 5-minute chart, look at some indicators there, and that's pretty much how I'll look at momentum, whenever you're looking at a certain time frame, if you want to get a better picture of what's actually going on, zoom to a closer time frame. So that's basically what we do with the Cowabunga system. We look at the overall trend with the 4-hour, then we make our entries on the 15-minute chart, and then to monitor our trades, we can go down even smaller to a 5-minute chart and get a momentum gauge through that. Now, it's not always 100%, but you can get a pretty good idea, and the more that you trade it, the better you'll get at identifying what the momentum is at that current time. And the only thing I can tell you is that the more you do it, the better you'll get. It just takes a lot of experience, but definitely look at smaller time frames to get indication of momentum. Okay. Oh, and now let's look at some news events for today. I'll just click on the Tools tab of babypips.com, and you'll see that we had news at 4:30 with the UK manufacturing PMI, 10 a.m. US ISM index, and let's see, at 1:45 Bernanke speaking. So 4:30, 10, and 1:45 are the times to watch out for. And now we're only looking for short trades, and with that information in mind, we can begin trading. So I'll move my chart one candle at a time. And here we get a crossover at 1:30 a.m. RSI is below 50, stochastics trending down, MACD is positive and losing value. This makes this a valid entry. The entry's at the close of the candle at 52.97, stops at the most recent swing high at 53.54, and then nearest 50 or 0 level is at 52.50. And now we'll just let our trade ride. Remember, we don't have news until 4:30, so we're okay here. Continue to move forward. And we almost get a target hit there. And actually here at 3 a.m. we do get our target hit. You can see that price makes a clean break there. So instead of taking our final profit, we're just going to move our stop here and set our next target for 5,200. Okay. As we continue to move on, you can see that our price continued to break down. We almost got stopped out here. On my chart, I got to 52.49, but we did get a clean break at 5,200. And during this candle, we would have moved our stop because of the momentum to 5,200 and then set our next target for 51.50. And you can see that during the same candle, our target at 51.50 was also hit, but this time did not make a clean break, so you would try to exit around there. Unfortunately, I wasn't quick enough to exit at 51.50, but I did get out at 51.70. So not quite all the way at 51.50, and again, it's not 100%, but what the price does is it tells you, okay, we're hitting this target, we're hitting these levels. You might want to look at your trade and look at momentum, see how it's going, and that will determine whether or not you hold on to your trade or take your profit. So that's where I exited. And if we continue to move on, see that price just continued to drop, so we didn't get any retracements in order to have a re-entry, and the price just continued to drop very nice throughout the day. But we did get a nice gain there, even though we weren't able to get all of it. We did catch it at the beginning and grab some nice pips there. So a nice way to come back to trading, especially after taking a long break. Hope you all had similar results, and hopefully you're getting better each and every day with these videos. And feel free to ask more questions and add more comments, and I'll be happy to answer them and help you out as best as I can. So that's it for today's update, and I will see you all on the next one. Cowabunga, dudes.